So in late September, the oil price went through $80. It's up 40% over the last 12 months. What's going on? Well, three big geopolitical factors are at play. The first is that the US is going to impose sanctions on Iran in November. Not only on Iran, on countries that trade with Iran. Iran is the world's fifth biggest producer of crude oil. That is bad news for oil supply. Secondly, Venezuelan oil production has collapsed as a result of the mismanagement of that country's economy. It's running at about half the levels that it was back in 2015. That's taken another chunk of supply out of the market. And the third factor is that the world's major oil producers have decided not to increase output, despite President Trump's increasingly bellicose demands that OPEC and the oil producers do increase output. What does this all mean? Well, for oil consumers, of course, it means higher gasoline prices, higher prices for petrol and other oil-based products. That transfers income from oil consuming to oil producing nations, and I think one of the reasons for believing that growth in the Western economies is going to be somewhat weaker in 2019 than 2018 is precisely because of the drag from higher oil prices. Of course, nothing lasts forever, and I think what we are going to see is that as global growth starts to slow and as oil production ramps up, particularly in America, in response to higher oil prices, we're going to see the oil price start to fall. So I must say, on a one-year view, looking towards the end of 2019, my personal view would be the oil price is likely to be lower than the $80 it hit in late September 2018.